Welcome to ShortView Trading, your morning market hit for Friday, 2nd of July. What matters today for traders? Well, they say you should never short a dull market, but I'm not so sure. In fact, when we see our sell-off indicator build up to its key level, its key plus 20 level, at which it warns of a heightened risk of a wave of risk aversion, a likelihood of a major pullback in equity markets, as that indicator builds, we often see that grind higher. And indeed, over the course of the last week, that's been the behavior we've seen in the S&P 500. It's ground out gains day after day, but they've been generally pretty small, 0.1, 0.2% on the day, a little bit more yesterday, Thursday, up about 0.5% on the session. But really over the course of recent trading sessions, a pretty dull, low volume grind higher in the S&P 500 as our sell-off indicator has reached its key plus 20 level and continued to tick on above that. Now at that level, it's an interesting signal. It warns of a heightened risk of a bit of a pullback in markets. It tells you there's excessive exuberance and an excessive appetite for risk in markets, and it's therefore indicating that caution is required, or short positions more precisely are the way forward. But interestingly, as that grind high has played out, what we've seen is various measures of risk appetite across the globe have started to fall away, and it's narrowed. The global risk appetite advance has narrowed as we've gone forward over the course of the last week or two. Indeed, look at some of these European equity markets. If you look at the DAX, whilst the S&P's been making new highs, it's been trading flat. You could make similar comments about a broader Euro Stocks, broader European index, or indeed look at something like the IBEX or the Italian MIB, whereby we see peaking out earlier in June and some weakness in these equity markets over recent weeks. But it's not just Europe, it's also in Asia. And indeed, overnight last night, we saw China and Hong Kong markets really quite weak, down around 2%. But really, Asian markets in general, they've been flat to trading lower over recent weeks or indeed months. Look at something like the South Korean Kospi. It's gone nowhere for a few months. The Japanese index been trading down since earlier this year, in a downtrend that is. So as we've had this grind higher in the US and new highs and sell-off indicator building to its key plus 20 level, we've had risk appetite in other parts of the world falling away and softening and diverging from the direction of the US. That suggests the strength in global risk appetite is dwindling and fading across the global financial landscape. Added to all of the above, lots of our short-term market timing models are back on sell. Whether you look at the S&P short-term technical scoring system, or the fund flows model, or the put to call ratio, all manner of models that we publish each and every day in our daily rag are at or close to sell signals once again. So for the full detail on how we're playing this, please see today's daily rag available to subscribers via the website. Or if you're interested in a 7-day free trial, please click on the link below. Put in your name and an email address, no need for credit card details, and we'll send you the daily rag for free for 7 trading sessions. So what are we watching today? Well, today, of course, is the key US non-farm payrolls data, the detail in that, how many jobs are created, wage inflation, the unemployment rate, the participation rate, and so on. All manner of data, very important in that data release. That'll be watched closely. It'll be interesting to see the reaction of bond yields. The dollar, of course, the dollar's been strengthening in recent trading sessions, which is typically associated with risk off. How that plays out will be very key and will be watched closely. So that's it from us. That's your morning market hit for Friday, 2nd of July. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under ShortView Trading, or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.